Davos. Shireen spoke to Dixit Joshi of Deutsche Bank, and he believes that the global economy actually could see better growth this year, and a growth of 3.4% in 2017. Let's listen in. That's a veteran voice and an expert voice on markets.
The global economy is on firmer ground. I think if you're expecting around 3.4% GDP growth this year, I think we're in a good position. That said, you do have a number of events on the horizon. Clearly, the path to Brexit is still uncertain. We have the invocation of Article 50, the path to be decided, whether transition period accompanies that or not, and how that plays out. So I think that potentially continues to create uncertainty.
The fact that now there is at least certainty that Theresa May is not interested in a single market, I mean, she's made that amply clear. Does that now scare capital away from the UK even further?
I think it's all dependent on exactly what gets negotiated during the next 2 years or having a suitable transition period. And that's why I think it's quite hard to take a view right now without actually letting that play out. And hence I say that that will continue to weigh on the markets and cause some anxiety until we see where we land.
What is the outlook both as far as global US equities as well as the dollar is concerned?
Well, we have seen a retracement on dollar recently. Yes. Again, I would say we're seeing a lot of noise in the dollar, but it does feel like the dollar uptrend will continue over the medium term. Higher rates, potentially higher inflation, a good GDP growth out of the US, I think will all help underpin the dollar. I think what is really interesting is just the global adjustments that will take place as a consequence. Emerging markets clearly is one.
My question.
Emerging markets is clearly one where in the short run this does weigh on, but not really in the medium or long run, because emerging markets are in much better position now than they were a few years ago.
So given the global context then, what's the outlook in terms of FI inflows into markets like India specifically?
So we have seen a reasonable amount of outflows, as we've seen in the Indian equity market over the last couple of months. That isn't entirely surprising when you look at the great prospects that we've had elsewhere in places like the United States. You've looked at the FTSE here as a consequence of the pound and how well the FTSE is done. So we have seen some capital flow migrate towards the areas of great opportunity. Equally, there is a recognition that demonetization and the negative credit impulse from that in the short run, once that dissipates, I think good growth there will lead to money starting to flow back again.
Would you think that currency volatility will be one of the key risks in 2017?
No doubt. I think with the number of elections that we have in Europe, as an example, we have the Dutch election, we have a German election, potentially Italian election, French election, you have the Catalonia independence vote, Brexit still playing out there. It will be left to be seen as to what the dollar path looks like, and no doubt positive, but somewhat bumpy. So I think this year will be characterized by more volatility and with the potential of some tail risk events, which we really shouldn't underestimate.
Okay, that's a veteran.